So it's ideal to see credit card data encrypted all the way from the card reader to the payment processor. It's also ideal to have the point-of-sale system completely segregated from the rest of the network, and then the point-of-sale system can have would ideally have anti-tampering code at the device level, real-time or near real-time alerts that get acted on, and lastly, third-party connections should be limited both in duration and the number, and not left connected for any longer than is necessary.
If I can add to that, Peter, on this whole point-of-sale issue is becoming bigger, especially in light of what happened at Target and really a lot of the other retailers who had point-of-sale breach events. Recently, I did an interview with Chris Novak with Verizon Forensics Group on specifically the point-of-sale failures and what happened and with the RAM scraper issue. And it's becoming clear that, at least in his mind, to avoid these kind of things, PCI, the actual PCI standard, is not picking up that piece where the actual client, the hacker was able to pull that data from the RAM memory when it wasn't actually encrypted. It actually is this a part of PCI that there's a hole in the whole overall standard, in his opinion. He thinks they're going to have to go back PCI and revisit some of this stuff. But his point was retailers are going to have to look at end-to-end encryption. From the point of sale, the time you swipe the card, it's encrypted right through the whole transaction. And that takes a little bit of investment to actually put that in place.
Yeah, I think I would just underscore that. I think when retailers tell you that they are encrypted end-to-end, I think what we're realizing is that they don't necessarily understand what end-to-end encryption is, and that's not necessarily what they mean. And I think, as Mark just mentioned, it is extremely important to get the credit card information encrypted right at swipe, which often does not occur.
One other point I'd like to make on this is that in response to the Target breach, the Department of Homeland Security U.S. Computer Emergency Readiness Team issued an alert memo basically for retailers and giving them a list of proposed best practices to kind of avoid malware breaches or protect themselves from them. And they give recommendations, which are somewhat basic, but obviously worth reiterating. Use strong passwords, update point-of-sale software applications, install firewalls, use antivirus, restrict access to the internet, and disallow remote access for their systems, for their point-of-sale systems.
Great. Thanks, Rich. Thank you, everyone, actually. Beth, what are you asking your underwriters to review before renewing or writing for the first time a point-of-sale merchant?
Sure. Well, I think we've already covered a number of the items. Just to add to that, looking to see whether the point-of-sale retailer is scanning point-of-sale devices for malware on a regular basis to try to catch things before they get out of control. Implementing tokenization. I think ultimately the best practice is tokenization. And then purchasing systems that are PCI DSS validated and configuring them through qualified vendors, and just ensuring that there are those best practices, many of which have otherwise been outlined already this morning, in place at any point of sale retailer.
And we're talking to our underwriters a lot about what to look for, so what things to get include warranty statements and prior acts limitations.
I think you still have to be focused on the easy stuff, right? I think a lot of these point-of-sale intrusions are complicated malware, but oftentimes the vector of intrusion is not that complicated. It's still the phishing attacks. It's still the poor password management that really, it starts the initial intrusion. So I think you really still have to focus on best practices, the people, and the process within the organization.
And along those lines, basically asking kind of basic questions. One of the things our underwriters ask is really whether or not they've been contacted by law enforcement regarding fraud, or credit card companies regarding any sort of infiltration into systems. Just find out if they've had activity in this regard.
All right, cool. I think everybody commented. Rich, what best practices are you seeing from brokers in working with point-of-sale retail and bringing it to market?
We're not seeing anything from brokers. No. Obviously, just kidding. But essentially, what we're looking for from brokers and what we see, obviously, from Peter, we see the best stuff, I might add. But we're looking for them basically having these discussions with the prospective clients, whether or not they have these safety implementations in place and whether or not they're being careful in protecting their point-of-sale systems for all the grounds that we've kind of discussed previously here.
Anyone else? No? Not seeing anything from brokers. Okay. Heartbleed made worldwide news, possibly 20% of companies' sites exposed. Has this been an issue for claims management? Maybe Mark, if you want to.
So I thought this was a good question. The Heartbleed issue a few weeks ago, we were getting call after call from actual risk managers, some of the brokers representing them, but also many of the underwriters in this room and around the world. And their main worry was they were worried about a sizable portion of their book of business all having a claim overnight or maybe in the coming months because of the Heartbleed issue. As Peter said, it impacted like 20% allegedly of all the public websites out there who are using the open SSL version. I was canvassing a number of the lawyers, defense lawyers, breach coaches over the past few weeks. No one has actually seen a live claim come in because of the Heartbleed issue. One of the tricks about the Heartbleed is there was no logs capturing whether the bad guy used that exploit or didn't use that exploit. There's actually no proof, just the way it technically worked. So bad guy could have actually gotten in over the past 2 years, harvested all the passwords or whatever, and still has them in his possession. Therefore, a lot of the prudent companies, if you probably got emails and things like that saying you need to change your password. I know I've gotten them for websites like PayPal and eBay and things like that. So it's just proof how something can happen kind of overnight that is used by the whole industry. It's just a technology or piece of software common to the whole industry, and bad guys are able to exploit that thing. But actual claims, I'll let these guys speak to that. I know that Mandiant put out a report that there was an actual breach event they investigated because of that. I think Canada had a tax agency that supposedly had some kind of major exploit because of specifically to the Heartbleed, but I'm not so sure the actual insurance partners have seen that yet.
Rob?
So as Mark described, it was an issue for everybody. What is Heartbleed? What is happening? So a lot of claim questions to the claim department about what we were seeing. We didn't see simply anything. I saw one claim notice out of Singapore which referenced Heartbleed, but nothing is developed, so very small. It was a vulnerability. It didn't leave a signature, so it's out there. The biggest issue we saw, opportunity was for loss control and to show people that, hey, you've got an issue, let's see how you're dealing with it. So it wasn't a claims issue, it was a loss control and prevention issue.
Yeah, from my end, really, the biggest impact has been all the internal inquiries along the lines of, hey, have you seen anything on Heartbleed? The reality is, I think we have one notice, and the notice was from a company that was basically reporting that they were not impacted by Heartbleed. So, knock wood, we've been okay with it. So.
The same here. We got a handful of circumstance notifications and one inquiry from an insured who said, wow, reading about this in the press reminded me I have a cyber policy. How do I ever report something underneath that? So.
And we actually spoke with the folks at Mandiant, and I think under certain circumstances, if the all the stars align, at that point you might be able to detect that somebody had exploited the Heartbleed bug. But I think at this point we all understand that, as Mark mentioned, it's really difficult to attribute any particular incident to Heartbleed because you can't actually detect whether it's the vulnerability has been exploited.
All right, great, thank you. I think many of you are seeing the same thing I am about healthcare and healthcare losses, the PHI being breached. What are you seeing in these losses? I know Mark's claim data really shows the size of these losses. Are you seeing a lot of claims? Are you paying a lot of claims in the healthcare arena?
We are. We are paying a significant amount of claims, and certainly the OCR has been very active in this space. I think we all understand also that the attorney generals have some enforcement abilities under high tech, but I think from our perspective, the AGs have not been as active, as aggressive as the OCR probably in enforcing high tech and HIPAA. We've seen them much more aggressive in enforcing their own breach notification laws, their own consumer protection laws. They may refer a case to the OCR once in a while, but we certainly haven't seen the aggression from the AGs as you do see on those from the OCR. I guess one other comment on that is there's not necessarily a causal link, I don't think, between the size of the event, the number of records that's been impacted, to the actual amount of the fine. From our perspective, it's not the number of records that's been impacted that really is the driver for these fines, but it's the cooperation or lack thereof by the insured or by the covered entity with the investigation. It's whether they actually have the proper policies and procedures in place. Whether they've gone through the risk assessment and the risk management process. I think if they have not gone through that process, that's where you will see the larger fines. As a way of comparison, I think probably back in May we had the largest single OCR fine related to a single event. I think it was Columbia University and New York Presbyterian Hospital. That event, which took place back in 2010, I believe, involved only about 6,800 records. That resulted in a $4.8 million fine. As a way of comparison, we've had breaches in seven figures, 2 million records that resulted in significantly lower fines, $50,000 or less. So it's really not about the number of records, the size of the event, but the security posture and the risk posture of the entity.
And I would add one of the other factors that I think that can exacerbate the level of fines assessments that you get here is whether or not the entity is a repeat offender. I've seen a couple of instances where entities have had prior breaches or even just prior regulatory issues, even non-breach issues, and the regulators will just throw the book at them and they get hit very hard as far as the assessments that are issued.
And I think that's where you will see some more activity from the Attorney General. So if they have some type of agreement in place from a prior breach, they will be a bit more aggressive at that point.
Great. Thank you all. Beth, I think the losses that we're seeing today related to a data breach really start with response, and not just how quickly, but how well you're responding to that breach, and more importantly, how well you're responding to that breach. I know today one of my clients is putting out notice to 250,000 current employees and former employees about the breach, and the process that you go through over sometimes weeks to make sure you do it right is important. Are you seeing for companies who either have been through a breach or been through a tabletop exercise, so you're seeing that they're better prepared for a breach and their response is far less costly?
Absolutely. Well, first I have to thank Meredith for that video, because I felt like my life for the last 5 years flashed before my eyes. But yes, I think that there are many companies that have gotten themselves in the position of being well prepared for addressing a breach and responding to a breach, whether they've had one before or whether they have really thought through the process, done a tabletop exercise, a workshop, and prepared themselves for the internal communications, the kind of response, the kind of preparation they need to have in place. And even, 5 years later, it does really amaze me that despite how much there is in the mass media about these breaches, about the vulnerabilities, about the risks, no matter how many really, talented brokers are trying to work with their clients to make sure they have the right coverage in place, there are many companies that we still see today, including just this week, where they really don't have the proper procedures in place. They haven't thought through the process. They may have some incident response plan that they put in place 4 years ago, but they never really worked through it in a practical mock exercise way, and they're not prepared to make the decisions they need to make. The people who need to communicate, who need to be able to sign off on those decisions aren't prepared for those communications, and they aren't prepared to make those decisions as quickly as they need to. And so even today, despite how much education there has been out there in all different industries about cyber risks, we are still finding companies that are underprepared for this and flounder at times in terms of their breach response. And so, it is an area that continues to need assistance and direction. I do think it is an area where carriers with this right experience can really assist companies in getting the right response and doing a comprehensive and efficient evaluation, in coming to conclusions, making determinations based on quality legal advice about what they need to do next, and then actioning a plan in a timely way. And so from my standpoint, there's still a lot of work to do out there. And there is still a lot to be done in terms of readiness and preparation for the ultimate process and the decision-making that is part of it.
Rob?
So cost is driven by scale. If you have a breach, a multiple breach, a second, third event, and you're afraid of reporting it because of the impact on the regulators, how they're going to throw the book at you, you're still better off doing the right thing, having the plan, putting it into action, and telling the message to the regulators yourself, as opposed to hiding it, especially if it's going to become public anyway. So you have the multiple events, that's okay because there's exposure. The regulators are more interested, in my experience, on what you're doing about it, how you got better, what you're telling them, when you're telling them.
Good, thanks. Tom, what do you feel is the biggest frustration, or what is your biggest frustration in responding to a breach?
Right. I think as Beth mentioned, it's breach response really happens before there is an incident, and I think we all understand at this point that it's extremely important to have the right incident response plan in place. It's also very important to identify the decision makers, people with actual authority to make decisions on the fly in response to a breach. If I had to point out a frustration, I think it would be just that. When we engage an insured at the initial call, we don't necessarily have access to the decision makers, or it's unclear who the decision makers are within the organization. I think that really does hinder the breach response process, and that's probably one of the bigger frustrations, especially at this point in the process where we are as an industry. Probably the second thing is, obviously, we all have a lot of partners in this room, and also just within the industry that have a lot of experience, dealing with breaches at this point. And I think, it's a bit frustrating when the policyholder does not necessarily take advantage of the resources that are available under the policy, quite frankly, because from our perspective, we can make the breach response process much more efficient and cost effective, and help protect the companies and the organization's brands if they do take advantage of all the resources that are available. Now, I think that said, though, I think from claims perspective, it's also important to know when to take a step back and to allow the organizations to just go through the process. I think obviously policyholders purchase insurance first and foremost for to transfer the financial risk. So I think often, or at times, we do have to understand that there's an internal process that they have to go through, and the best thing that we can do is to pull out the checkbook and pay the claim as quickly as possible.
If I could add just something, Peter, to what Tom said, just really echoing what I hear from many of Tom's peers, really a lot of the same themes. Clients oftentimes tapping into their own internal corporate counsel, outside corporate counsel, who is really learning off then the insurer's dime about dealing with data breach events, not necessarily using the skilled breach coach folks like Tom, Rich, and Rob and Beth bring to the table. Same thing along with forensics. In a panic buying situation, going out just finding a provider, maybe just in their backyard, oftentimes paying double, triple the amount of rates for those providers, and just eating through their SIR in a much quicker way by not really leveraging the skilled providers that these insurers bring to the table. So at the end of the day, a lot of these guys are still paying the bill, I guess, for these clients going outside the provider list. So.
Yeah, and I think, Mark, for me, I mean, that is definitely a frustration where notice to us as the carrier is delayed because you have a lot of very experienced people at the cyber carriers who can really help you identify the best resources to assist you in evaluating, investigating, and making those necessary decisions. And there's a lot of law firms out there. I'm sure everyone on this panel gets approached by them with glossy brochures and articles that some associate wrote that the partner puts his name on, but they really don't have any actual breach response experience, and they don't know how to navigate through the process with the client. They are learning on the client's dime. They have some summer associate running around doing a 50-state survey. That is not the kind of legal assistance that any company needs when it is experiencing a breach. They need somebody who is an expert in the field, who knows the law, and can help give them the solid advice they need on their next steps. And so the frustration for me is when an insured shows up, oh, we think we have a breach, we started investigating it, it's been going on for a week, and by the way, we've already brought in XYZ firm, they do all of our corporate work, and they know breaches too.
And to reiterate on what Beth is saying, chances are the people up here, when a breach gets reported, have significantly more experience in dealing with breaches than the entity that suffered the breach, and we can help guide them. And it's very frustrating from our perspective when, in instances we're essentially held at an arm's length on getting information and assisting in the response when we know we can probably add value and assist in making the response much more affordable.
So the right vendors absolutely make the difference, but it's frustrating when an entity wants to manage their SIR more than they want to manage the event. They don't want to retain any vendors, so that's one of my biggest frustrations.
You can see they're passionate about this. It's probably the most difficult part of their job is getting everything coordinated right from the beginning. Rich, what sectors do you see that are doing handling the response better or worse in that case?
For better, I would say probably the medical profession does it best, if only because they've been dealing with privacy type issues, essentially well before, data breaches existed. So they generally have policies in place as far as protecting patient information, et cetera, and generally run through tests, and unfortunately there are exceptions to every rule, but generally will, know how to respond to an incident. Other than that, as far as good responders, I think the media companies in general are a little bit better, and if only because they're much more skilled in the public relations aspect of it, and they know how to spin it a little bit better, and I think they know how to announce things a little bit better than a lot of companies would. So, and as far as bad responders, I think maybe retailers in general, just looking at recent history. So.
Peter, on this topic, actually 2 points I wanted to go into. Some of the folks I see over and over again, listening to claims representative partners and some of the top defense lawyers and breach coaches, is the service provider industry, especially having events, tapping into like the breach coach lawyers, getting some initial advice, and then realizing the magnitude of the event and what their duties are and their reputation on the line, and literally just going away and doing nothing about it. And I don't know if it's going to come back to bite some of these guys, and then the penalties are all that much more for not actually doing the notice, when some of the breach coach lawyers might have said you probably need to notify under the certain state laws. Again, they're reading about it in the press. They're worried about, as a service provider, their customers who they may be tied to their system, or they may be in the care, custody, and control of their data. They're losing that contract with that partner for whatever the reason. We've seen it a number of times where these guys just go away and do nothing about it. And it also leads me to the topic, and I don't want to muddy the waters here, guys, because no one really necessarily knew about this question, but the cloud, this is something that's been on my mind in general. I want to do a better job next year in our claims study of specifically asking about cloud-related issues, because we have seen a couple cases now where cloud had an issue, they reported the breach to the client literally 6 months later, and it impacted the customer. And I think it's going to be, in general, cause headaches for guys up on this panel when They have to forensically investigate those kind of cases, and the cloud won't allow them onto their environment to figure out who, what, when, where, and how. And then how do you actually know the policy was incepted when this breach actually took place? The whole cloud area is something I want to focus on better this coming year and ask those questions. But I don't know if anybody here is incurring anything on the cloud yet.
Not specific to that, but everything we just said sounds gloomy. On the other end, you do have entities who have an issue and they want to notify, even though might not be an obvious regulatory requirement. So we support voluntary notification if the issue is going to become public anyway. You want to get ahead of it in the regulators and the news and the press. So that's part of the PR part of the event management. So it's just that some entities are more willing and interested in doing that.
We're certainly focused on the right to access and the forensic investigation piece if there is a breach on the cloud. So I think it is extremely important to identify forensics firms out there that have great relationships with cloud providers so that you can conduct investigations and you can gain some access to the images that you might need to conduct the right forensics process.
Great. Rob, this has been touched on a bit in our discussion, but are there best practices that you feel risk management should be employing that would help in the breach response process?
Absolutely. So it's a repeat of the idea. Use your risk tools, have loss control in place. But the biggest thing beyond that is before you have a claim and you're having a relationship with your carrier, your broker, also begin to have a relationship with your claims team so that when there is an event, you know what to expect and who you're going to deal with. It's a tremendous facilitator for dealing with an event.
Good. Any questions on that? No. That's too bad. The next topic is network business interruption. We don't talk a lot about network business interruption, but with some of the things that have occurred from attacks from different countries, as well as what the U.S. is doing with the critical infrastructure framework. It's becoming a topic not just in government but within our clients. We're seeing more manufacturing companies who are interested in this coverage because of the concern over either network business interruption or, in many cases, the theft of intellectual property. So we're going to focus a little bit on questions related to this. Mark, maybe you could give us a bit on what critical data do you need to adjust a network business interruption loss, and then others will chime in.
Yeah. So business interruption is a cyber risk exposure. A lot of this whole conference is rightfully focused on privacy, data breach kind of things. There's whole other areas that we'll get into when you talk about cyber risk, like intellectual property theft, I think is a really, really big one for the Fortune 2000. But business interruption is a key issue we hear about from some clients as in the sectors that Peter just mentioned, manufacturing, people with supply chain systems. They need their availability of their network up consistently. We don't personally I don't see so many of those claims because I think that kind of the coverage, and I know other panels will get into that, isn't necessarily sold as often as the liability coverage, so therefore the claims folks don't necessarily see these kind of claims. But we have been brought in on a couple, and who's a key person involved in all this would be a forensic accountant that really help the client figure out what was their actual loss as a result of this 48-hour downtime. But one of is from an investigative perspective, the things that we asked for and the client provided, the insured provided, was their ISP logs. And they provide very nice graphical images of here's when the attack, the denial of service attack, start pummeling them on a certain date, certain time, and you just see a spike up in the bandwidth consumption. And it lasts for several hours or several days, and then it's over. They were able to put something in place that probably should have been in place before the event ever happened, like a vendor like DOS Arrest. They're out there, they prevent denial of service attacks within 15 minutes of being reported to them. Many clients, because of lack of money or budget, they don't actually have these sophisticated anti-denial of service controls in place, which would really save them if business interruption is their major exposure. But the logs for these guys, for the claims folks, I think are very important to prove it actually happened. It happened in this period of time. It ended in this period of time. And then from there, it's probably traditional, really, calculating what their annual revenues are minus traditional expenses, and then indemnifying them for that lost period. We've seen, again, forensic accounting folks being brought in for that actual calculation.
Great. Many of my clients look at this type of loss and they think about their facilities and disruption to their facilities. If Sandy hit, the downtime associated with it, how do we compare this time to other times in order to really calculate what our loss was? Rob, what data points are you looking at when there is a network business interruption loss?
First, you understand that the loss is going to be after a retention, after a waiting period, but then we're going to look at sales records. So the policy says we will give due consideration to prior experience and probable business that you could have earned. So looking at your history, you want to give us 1 quarter, we might ask for 2, but at least go back a year. If you're saying that you had a giant spike, we want to follow that along. So it's all the art and science of a proof of loss is to show us what you were doing, where you thought you were going, and then we deal with the forensic analysis to vet that.
And often I think you'll see in a network business interruption loss, once the website is back up, you'll often see a spike because, the customers are loyal, they do come back, and so that's also sometimes a factor in determining what the actual loss is once the systems are restored.
Great. Thanks, Beth. Are the extra expenses and forensics costs exceeding the loss of income?
I haven't had a great deal of business interruption claims on our trend slides from past presentations. You'd see this there. You're going to see more. You're going to see more. I'd still list it there, so we're not seeing that many. But no, extra expense or forensics costs are not, in my experience, on the nature of the companies we cover for business interruption, for cyber, exceeding the loss of income. The loss of income is the impact from service providers, not as much as, say, a manufacturing facility who has to relocate or hire other resources. So.
Thanks. For those companies, Tom, that are not purchasing network business interruption, a couple of years ago, an underwriter told me that 90% of their insureds do not purchase network business interruption. Another underwriter told me 70% do not purchase network business interruption. What do you feel, Tom, is the main reason why they're not purchasing and why they should be considering?
Well, as a claims guy, I think it seems to me that most companies underestimate their exposure related to business interruption. I think there are a couple of really good reasons for that. One is just there's so much media attention to the privacy-related breaches that involve personal information. There isn't the same type of media attention, for business interruption. Quite frankly, obviously, we see some coverage with regard to DDoS attacks, but certainly not to the level of coverage that we might see for a large retail breach, for example. And also, I think most companies have not gone through a catastrophic business interruption loss yet, and I don't think there has been any, catastrophic type of events or payments that we've made under business interruption. So I think those two factors really weigh heavily for companies, when they're deciding whether to purchase business interruption or not. But I think everyone in this room knows. I think because there's significant increase in malicious activity, whether it's a hack or a rogue employee and so forth. We do see a lot more activity on the DDoS front. We do see a lot more activity with particular targets for supply chains, particular targets for infrastructure. I think it's unwise at this point to think that you're not going to see the same type of loss experience or same magnitude of losses that you see in the privacy liability part as we will see going forward in the business interruption part. And
along the lines of suspicious or additional malicious activity, I think in light of kind of world political tensions these days, a lot of the malicious activity comes out of places like Russia, where the United States is not on the best terms currently, and I think a lot of businesses may get targeted in this country based on political aspects. So I think that's a basis to think there'll be additional activity in this area.
Cyber has been called at times the new EPLI from the way the product's going to grow, et cetera. I have always said it's more like the new property because of the first-party element, because of the proof of loss aspect, like fidelity and property. So I think you'll see much more interest in business interruption arising out of the other types of risk, property risks, environmental risks, et cetera, that you'll see in some of the newer broadening types of cyber coverage as opposed to what we're used to as service providers, retailers, and their income.
Great. Tom, with more companies outsourcing to third parties, critical operational applications, are you seeing more losses in that area from a business interruption standpoint?
Sure. I think as a general matter, we do see a lot of our incidents arise from vendor mismanagement, third-party negligence, or third-party malfeasance. That said, I think at least in the cloud environment, a lot of the incidents do still result or arise out of some negligence or malfeasance on the client side. So we've certainly seen an uptick in those claims, but I would still say that it's not a significant uptick. It's not a significant. We're not seeing a significant number of contingent BI claims, strictly as a result of vendor side mismanagement or negligence.
Great, Rob. What are the challenges in dealing with a loss that's triggered by that outsourced provider?
Getting the insured to understand that there's a sublimit in the policy for that aspect of it. So the underwriting of it is hard because you have to wonder and deal with all the different entities that they might deal with. So that's the same challenge when there is a claim. But if it's network interruption, business interruption, it's first party, the insured has to present the claim, has to present the proof of loss. So getting the information is hard, but it's the insured's obligation to get it collected. So that's somewhat comforting because they have to present it as a package as opposed to a third-party claim where it's always harder to try and find different parties who you need to get information from. So, but the biggest challenge is that, but the insured's obligation is a buffer to that.
Cool. Any questions on that area? No. Is everyone awake today?
Sorry.
We have one. Yes, sir.
Do you consider supply chain risk part of this area of network business disruption? And how do y'all deal with that?
Okay. This is perfect. This is, we're all concerned about retail breach, and supply chain is where you make your money. Product going in, product going out. Are we seeing any losses there?
Everyone would look this way. I have nobody to look at.
That's pretty funny.
Not significant notices, but not severe claims. Again, I put it on the trend list of things to expect. Just surprisingly haven't.
I don't know if that answered your question, but we have another one.
I could try better after if you want to talk. Yeah.
They should be doing that due diligence.
Oh, please use the mic. Who's speaking?
No?
Same person.
Oh, sorry.
No, just to follow up, it's an area of a lot of concern to people who think about risk. I have a feeling that companies are probably still a bit head in the sand, or because it's such an astronomical exposure, they don't want to think about it, would be my guess.
That's fair. So I would like to talk to you after, but I'll drag one of my underwriters with me to help on the front end part of it.
What's interesting, talking to a retailer, the very large retailer, and they wanted to talk just about privacy. And when I got into network business interruption and supply chain management, that's what really turned them as to the value of this insurance, because of the fact that if your critical applications are disrupted and logistics, supply chain management, distribution. What's funny is that when I say DC, I'm thinking data center. When they say DC, it's distribution center. So it is a key area that, if disrupted, could affect any retailer, any hospitality organization that is relying on that product coming in and going out.
Sorry, Ty Lambo from Cloudy Assurance. Mine's just a follow-up to the gentleman's question about supply chain risks, and especially in the underwriting process. We've seen cases like, obviously, the Target breach, where there was some element, or suspected to be some element of supply chain risk involved. So my question to the panel is, in situations where maybe it's a kind of a joint negligence or responsibility between the supplier and the insured, how do you typically handle that from a claim standpoint?
I mean, Ty, I think you're partly getting into one of the things I talked about earlier. I think that's where there's going to be a lot of headaches going forward, where I don't know if those things are clearly laid out in service level agreements. If the supply chain goes down, do I have the ability to actually investigate that for my insurer and forensically give them the facts that it happened on this time, this place, here's how long the outage was. You're relying on a cloud or whoever that service provider is who you might be outsourcing to. I think it's just going to be a lot of issues going forward. So.
A lot of issues because you have an obligation to your policy to react, but your client may have contractual protections, but those will come after. So you have to understand everything that happened, then also line up the contracts and see what limitations or rights you have.
And one of the other issues is that the contractual protections may not be adequate for the scope of the breach. So,
I think whether our policyholder is the third-party vendor or the data owner, I think the main focus is to get through the process, and then we'll worry about sharing and contributions, indemnity, things like that. After we handle the breach.
We have another question. We do have 2 mics on the floor, so don't be shy in the background, in the back.
So are you seeing any claims involving service outages from, let's say, outsourced technology providers or, let's say, cloud vendors? And how are those being handled? Are they contractual matters, service credits? And how does that claim get worked out?
Anyone want to take that?
They're seeing very little, but those are the issues we look at, is what does the contract say, what's the obligation. Service credits are an issue we deal with underwriting on, if it's something someone's requesting, how we employ that in the claim, that's case by case, but it's not a significant bed of activity.
And I've seen one instance along these lines, and in that there was basically a liquidated damages provision within it. If the outage, in effect, went a certain time period, it was a set amount, and depending on the time frame, the amount was there. And policies may respond. It depends on what the actual damage may be. It could impact what the policy responds to with that. So.
Here I come.
Okay, we have one more question.
What my concern is going to be in the future is that, and I'm in healthcare and had a large breach this past year, is that now when I'm in my renewal, nobody wants to look at me anymore, okay? And what I see is that what happened to us in the medical mal program years ago is that as healthcare organizations, we either had to go bare bones or started to do our own risk retention because we could not get insurance anymore. And when I look at what is happening and just use myself as our only example, I see that happening. So I guess I'm looking at these insurers, all of you up there, and just saying, okay, this is and all my colleagues in the same way who's not even had a breach, but has looked at our experiences, we're shaking in our boots, to be really honest with you. And we see this whole thing. This is my number one risk right now. When I look at everything that I'm involved in the medical field, medical malpractice to me is going way down, and cyber is my number one concern. So, tell me what you think this future is going to be, because I can only look at my own example of what is happening to me right now.
Well, first, that just opened our last question. What's trending? Second, you'll have 7 brokers attacking you after this session. Beth, you want to take a shot?
Sure. I think from my perspective, we've seen some insureds, healthcare insureds, who've had some very large breaches, and I know, my underwriters have renewed all of those accounts. So I think some of it is really what Peter's saying is maybe making sure that your broker is working closely with you for you to be able to articulate whatever you've done to perhaps bring some improvements. If there's employee training, if there's new procedures, if there's, encryption that you're doing with any portable media, there's things that you can do to improve your risk profile, and your broker can work with you on that and advise you on that, which would help you in your renewal process. And I think, certainly from my, experience, we're renewing our healthcare accounts, regardless of if they're having a large breach. It's a matter of what the organization, is doing to improve their risk and what they're learning from the breach experience.
So I agree completely, and it just takes us back to our first question that Peter asked. What lessons have we learned from the POS retail breaches? It's the same on the healthcare. So we are looking at healthcare, and if you had a claim, didn't have a claim, what's happening in the industry? So it's not like you've seen in med mal, complete leave markets. It's a whole different insurance too, with compulsory requirements. But so we are definitely just strike one, you're out. It's not the case.
I think most carriers understand that organizations are in different places in terms of their security posture, and I think many of us, I think, are moving beyond just a simple risk transfer. We do want to be there to help improve your security posture. We want to be there to help improve your lost. To really mitigate some of the losses that you might face on the back end. So I think there are additional resources that are going to be available through the insurance product or the insurance carriers that you can take advantage of to improve your security posture going forward.
And I think it's fair to say that loss history obviously is one factor that the carriers will look at, but they will look at the risk as a whole and see, like Beth said, what changes may have been implemented to make it a better risk. So I think all the carriers basically will look at all the factors in considering renewals.
One more question. Thank you.
Thank you. James Smith from the North Star Group. In some of the trends that we've been seeing, ransomware seems to be making a comeback. Have you started to see claims involving that at all?
Yes.
Yes.
And yes.
I'm not sure, you said come back, I'm not sure it went away either. So, we have seen claims. Not as many, again, from a trend list as I would have expected. A lot in Australia, Europe, less in the U.S. I think our criminal investigation framework just reacts to it much more quickly. But yes.
We've seen a couple of CryptoLocker, type of claims. We've also seen some extortion claims related to, threats of DDoS attacks, things like that. But usually the demand is relatively low. We're still talking about hundreds of dollars versus, hundreds of thousands of dollars that are being demanded as part of, these CryptoLocker type of claims. So I think in terms of the actual losses being paid out, it's probably not as significant as you might think.
Great. Just lastly, when I first started out in this area back in 99, 2000, everyone thought this was just another Y2K. And it went on for a couple of years like that. We weren't seeing a lot of losses. The fact that this is really the first session of NetDiligence presentation every year, the value of claims to share with your clients is so important that they understand what is trending today, how the underwriters are responding to those losses, what's being paid. All of that is important for you to share, and I think the detail that the panel gave you today is very valuable and appreciated. Thank you.